please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Sonia and Surabhi, and of course talking in football parlance. Today is a big match. There's a massive decline in crude oil prices, but at the same time there's a big decline in emerging market currencies as well. Let's see who wins or if there's a draw. Let's see. Good morning, both of you.
Hi, good morning. Yes, it's football fever all the way, right? After the excitement we had over the weekend. But morning, Surabhi.
Morning, Sonia.
It has looked pretty good for us. I mean, in terms of the fall in crude prices, yes. But on the other hand, the fall in mid-caps, that's something that we saw all through last week. So you get a sense that this market could perhaps be seeing some more moves on the downside?
And just to rephrase that, Sonia, if I could say, is it going to be a season of upsets? Because this weekend was almost a weekend of upsets if you're talking about some of the marquee players and the marquee teams, Anuj.
So the issue here is, normally I would have thought that this big decline in crude oil prices should have led the markets to a really good sort of innings today. But, that's been accompanied by big risk off as well. So in that sense, if you see the emerging market currencies, for us, the fact is that we are very sensitive to crude oil prices, and in that sense, I don't know if what the SGX Nifty is indicating is going to be right. I think you will find today that a lot of stocks will do well. Airline companies, perhaps oil marketing companies, paint companies. I think some of these stocks will do well. Overall, who wins? Whether it's big decline in emerging market currencies is an issue or crude prices. I think we'll find out. What is interesting, what was interesting on Friday was that there was a big decline in the Bank Nifty on Friday. Even the late recovery, the Bank Nifty still closed with about 150-point cut. But Nifty, recovered all of the losses and bang at that support level that we were talking about on Friday morning. The range that we were talking about, 10,750 to 10,850, 900. I think that is well and truly intact. And you are selling on a breakdown or buying on a breakout. This market is punishing you. You have to buy the dips, sell the rally. You have to play this range. 10,650 to 10,900 is the range. Nifty has support from IT. Pharma is doing well, Reliance is doing well, and FMCG is doing well. So there are 3 or 4 legs which are supporting the market at this point in time. My sense is you have beautiful range today to play with. The Friday's low of 10,755. I think that's the first logical support. If the Nifty goes there for any reason, logically you should, traders should attempt to buy into that with a stop loss of say 20-30 points. If for any reason you see a rally towards 10,830, that should provide the Friday high, that should provide the first major resistance. If you're selling the breakdown or buying the breakout, this market will trap you. This market's been trapping. First logical support. If the Nifty goes there for any reason, logically you should, traders should attempt to buy into that with a stop loss of say 20-30 points. If for any reason you see a rally towards 10,830, that should provide the Friday high, that should provide the first major resistance. If you're selling the breakdown or buying the breakout, this market will trap you. This market's been trapping the breakout or breakdown traders for last many days, and I don't see any reason why that should not change.
Since you said breakdown, I wanted to ask you also about what's happening with the global markets, because one thing that stands out is the way the volatility index has fallen quite a bit, and there are some people suggesting that perhaps this indicates that complete complacency in global markets. Does that have any correlation with the way our markets are moving?
Good that you raised this point, and on that, I would want to tell, especially retail, to not look at what's happening in the US market and what's happening here. In US market, what you're seeing, of course, you're talking about the VIX as well, the CBOE VIX, that's been falling. In US market, the broad market is outperforming. The broad market, Sonia, is making new all-time highs. Yes, Nasdaq has been hitting new highs, but if you go further down, the Russell 2000, the mid caps are in a big roaring bull market in US because of the economy in the US. In India, what you've seen is that mid caps, in fact, for last 2 or 3 days, once again, there's been a fresh round of selling, and the mid cap rally is showing signs of halt. It's already shown signs of distribution, and you'll be better off this year staying in the comfort of large caps, or, whether index stocks or non-index large caps, or if you have to go down to mid caps, strictly stick to stocks where there's absolutely no leverage, no management problem, and there's absolutely no issue of auditors and all these issues. Because if you get into these stocks, trust me, there's a good chance that you'll be holding stocks 40-60% lower from here on as well. This is going to be a bit of a tough year for mid-cap investors, because 2017 was just too good to be true. And after a year like 2017, normally you have a bit of a reality check, and 2018 is turning out like that. Okay.
I just want to put on table a lot of the mixed money market cues that we are getting today. As Anuj has already pointed out, you were talking about oil prices, of course, being the biggest trigger. But beyond that, I mean, 68 was the level at which we closed today, and the dollar has been very strong, almost a 7-month high. We're talking almost 95 on the dollar index. So let's see if that can be countered. There was also trade data that came out on Friday. So the May deficit number is back above the $14 billion a month level. So that's a little bit of a niggling worry. It's a 3-month high. However, there is an increase in the non-gold imports, which is typically taken as a good signal as well. So that's the silver lining. And exports continue their slightly sluggish trend at around 28 billion. So that's one thing. Additionally, for the bond market, one more point to add is there was a relaxation. RBI issued a circular on Friday whereby it has relaxed certain rules for foreign investors buying corporate bonds. There was a cap that the RBI had placed that they cannot take exposure beyond $20 billion, beyond 20% of their holdings in a single corporate entity. This was an April circular. Now the RBI has gone back and provided some leeway on that. So maybe that could be a sentiment positive for the money markets. But Anu, just a final quick point on IT and pharma. The leadership sectors that were constantly sort of trumping the decline and the weakness that we were seeing in banks. Is that a trend that you would expect to perhaps continue seeing this week as well?
Yeah, the proof of pudding is in the eating. I think the way it will be tested today is in Dr. Reddy's. We'll talk about it in top 10. Yeah. But there's a bit of a potential negative news on Dr. Reddy's, but it's been the strongest pharma stock. So what will be interesting is if that decline is bought. But this pharma rally that you're seeing has some legs. Just like we saw that IT rally that started last year has legs. So a lot of money is moving to the safe havens, defensives, and some of these stocks are trading at multi-year low valuation. So my sense is that this rally has some more legs to go.
Okay, well, let's kickstart the show on that note, right? Lots happening in the next 2.5 hours. And here's what our wise experts have to say as we head into trade this morning. Mahesh Nandurkar of CLSA says Nifty's 8% move off its March 2018 lows has come amidst rising bond yields. He says while the PE has not touched a new high since then, the other relative value indicators like the gap between earnings yield and bond yield and the risk premium are flashing red. He says similar levels in the past had triggered a bond equity yield convergence. He adds, given the recent policy rate hike, the weak fiscal situation and a worsening inflation outlook, their view is that bond yields are unlikely to cool off this time around. Thus, Mahesh says a PE multiple correction remains a strong possibility. In fact, he's been, the most bearish that I've heard from Mahesh in a very long time.
Oh, yes. And, this PE contraction is well and truly the story because PEs have to be looked at in context of interest rates, and this is a year of a rise in interest rates. So Neelkanth Mishra of Credit Suisse says that after better than expected FDI, lower jewelry net imports reduce concerns on India's balance of payments, but he adds the gap between current account deficit and capital inflows is still worryingly large. He prefers firms with USD-based revenues like metals, IT, and avoids staples.
All right, let's also tell what to do with respect to the money markets. As Surbhi was pointing out, 68 to the dollar now. Well, it was expected, given that it was around that 67.90 level for a long time. Pramit Brahmavat of Veracity says a strengthening dollar will put pressure on the rupee. He expects the spot dollar INR pair to trade in a range of 67.80 to 68.20.
Ajay Magnolia of Edelweiss says the bond markets will be encouraged by the sizable drop in crude prices and gilts are expected to extend the healthy gains seen on Friday. He says the sentiment seems to be stabilizing after the MPC rate hike and buying momentum might pick up if crude and currency do not play spoil sport. He expects the 10-year bond to trade in a range of 7.83 to 7.91 today.
Okay, time to take a more detailed look at what's happening in global markets. The best headline for us, of course, is that big fall in oil prices. Over to Nigel.
Well, starting with the U.S. markets, they ended in the red in Friday's trading session. But remember, those markets, they came off considerably from the low point of the day. Remember, they were under pressure on the back of, duties that were likely to be imposed on imports coming in from China. By the time we wound up, though, those markets as well did bounce off the lows. Stocks that get impacted normally are the likes of Boeing as well as Caterpillar. They're very sensitive to this news. They were down nearly around 3%. They came off the session's lows by the time they wound up. Shifting focus to the European markets, though, if you take a look at those markets, they had a big run in Thursday's trading session. The ECB sounded more dovish than hawkish, and that's why we saw a rally. Well, in Friday's trading session, they gave up most of those gains. All those three indices ended in the red. Couple of stocks that were in focus. Rolls-Royce, that stock was running away. The company raised the cash flow forecast, so that stock was up nearly around 7.5% to around 8%. On the flip side, H&M was under some pressure. The same-store sales numbers didn't look that great. The stock ended with a sharper cut. Coming to the Asian markets today, well, we have both a couple of markets that are open. That's the Japanese and the Kospi. They're trading with cuts of closer around 1%. But remember, quite a few markets are shut today. The Chinese market is shut. You have the Hong Kong market is shut, as well as the Taiwanese index that's shut. But the big cue today, and what's going to bat for the bulls, really is that Brent crude prices have now corrected more than 4% from the close in Friday's trading session. We're waiting for cues from the OPEC meet in Vienna. The SGX Nifty, though, is indicating a bit of a softer start. Back to you all.
Okay, Nigel, thanks a lot for that. Of course, Donald Trump had tweeted that day, remember, and since that time, the crude oil prices are down almost $5. That's a big drop. But let's get back to talking about our market. Over the weekend, I caught up with a veteran of many market cycles, Shankar Sharma, and he says that barring a few bad apples, the cards still looked pretty good. Are we still in bull market? Because well, the Nifty might be at 10,800.
It doesn't feel like
it. It doesn't feel like that. You know, a lot of my friends say
it's like the weather forecast. You know, the weather report you see.
Exactly.
The temperature is 31, but feels like 35.
Exactly. You know, a lot of people say my portfolio looks like 10,200. Some say my portfolio looks like 9,800. And the ones who have been invested in the 1% of the world say that my portfolio looks like the Nifty is at 6,500.
Well, I mean, that's the market for you. I mean, it's a mirror with a lot of individual facets. So depending on which facet is suiting you, you can choose that facet. I think for people who were unlucky, and I can only say that, you know, if you're stuck in a stock like Manpasand or even Vakrangi or whatever, you know, I can only put it down to bad luck because, you know, if, you know, dodgy accounting is a problem. I think there are many, many companies, including very large ones, who have the same or similar things. And that's true globally. But, you know, it's your bad luck if, you know, it was suddenly whistled out and, you know, somebody blew the whistle on it. But on the other hand, I mean, I think just small caps, which are sort of problematic, like these names, I think they have held up very well. And in fact, from the peaks of January, they are down about 25% or so,
yes,
more or less, which in any good correction, you would expect a small cap to fall at least 25, if not between 30 and 40%. That is par for the course. I don't think there's anything untoward at all.
Okay.
And, you know, I think I don't know whether it's been with you or maybe some of your colleagues, that in 2008, you know, that's a very good year to analyze data, okay, about market falls, because that is the biggest fall that a whole generation of investors has seen, and I doubt if we'll see another one like that when 60% index fell.
Yes.
Just an index fall of 60-65%, which tells you stocks fell like 90, 95, 99%, right? If you look at that data, the ones that were below the market in terms of fall, which is below, I mean, rather more than 65, okay, which are real estate, commodities, and some banks, you know, infra, all of them had only one thing in common, and which was leverage. So all of them had debt. Companies without debt actually fell far less in the market. So the worst in those lots, I mean, M&M, etc., were like down 50%.
Yes.
Now imagine in a year like 2008, which is never going to happen to the best of my understanding, the worst that the unleveraged stocks fell was 50%. That means in a normal correction, if you're down 25, 30%, this is not a 2008 by any standards.
Yes.
Nowhere in the world. 25, 30, 40, you're done. This is it. It doesn't get any worse than this.
But what do you think led to this correction in the broader market? Was it the euphoria of last year? Was it just that, or was it the long-term capital gains tax? And you have this ASM, which, you know, a lot of people are blaming. What led to this sharp and brutal correction? On an average, the BSE stock, I think, is down about 36-37% on an average.
Well, go back to 2017 for the answer. We had a very, very bad, I think, July or August. Very bad. I mean, if you look at the index, you will see, I think the small cap index fell like 15-17%. And therefore, you know, stocks fell again 25 to 35, 40%. 4 months later, nobody even remembers that. Even you have a hard time remembering
Yes,
it.
I
Right?
don't.
Think about it. And you watch it every day.
Yes.
Right?
Yes.
Mind scrolls away these events. And we say, 2017 was great and, you know, 2018 has been terrible. And I say, you had a similar fall in 2017, right in the middle of the year. And in fact, it had happened against post-demo. These things happen. Reasons always sort of, you know, conjure themselves up. But it's particularly in the small cap end of the market, if you're not prepared for a 20-30% cut like this, you have no business being there. So I don't see any of this as being extraordinary. We had a great 2017. The market was due for a correction. It was not due for a bear market. This is not a bear market. This is a good correction in an overall still what is a very strong small cap bull market.
Hi, good morning. Welcome back to Bazaar Morning Call. This morning, actually, a lot of Asian markets are shut. They have a holiday. Lucky them. China, Hong Kong, Taiwan are all shut today. The SGX is indicating that the start will be in the red. Let's see how things go. Our research team is here, as always, to give you the list of top 10 stocks to watch as we kickstart our trading day. Anuj, what are you looking at? Team is here, as always, to give you the list of top 10 stocks to watch as we kickstart our trading day. Anuj, what are you looking at?
So, Sonia, perhaps for the 10th or 20th time this year, Tech Mahindra, it's this is a year in which you have to be looking at strong stocks in strong sector. Tech Mahindra is the strongest stock in the strongest sector. It continues to see buying every time it dips towards 20-day moving average. Post-result, it had that correction. That's well and truly over, and now it's jumping. And I'm repeating a stock that I pointed out on Friday, Natco Pharma. 2 times jump in delivery volumes. Pharma is in a real bull market for now, near term. And, this stock is at the cusp of making a major crossover in moving averages 20 and 50. So that will be interesting to see if there's any follow-through in Natco Pharma.
Okay, let's get to some more stocks then. Ekta, Dr. Reddy's Street was celebrating the launch of Suboxone on Friday, but it seems there's a court case twist of sorts in the US.
Yes, well, this is a risk that we had pointed out very clearly on Friday, that this was an at-risk launch for Dr. Reddy's. So obviously any sort of litigation from the innovator would be the biggest risk for Dr. Reddy's, and that's exactly what's happening, where the district court has actually put an injunction from them to stop selling the drug until a hearing on the 28th of June. This is to do with one patent, we understand, as of now. So yes, net, it is negative for Dr. Reddy's for today, but the larger picture for Dr. Reddy's is that they're probably getting their act together because they've stuck to their guidance of getting approval for Suboxone by the mid of June, which they had said earlier. So the larger picture should be, yes, okay, it's positive, but for today, definitely a correction.
Okay, for today, you should see a correction on Dr. Reddy's. From 2000 to 2350 has been a big rally, actually from 1900. Let's see how much of it gets corrected in today's trade. But Manisha, the big moves are happening in the crude oil market.
Oh, well, yes, and we have seen more than 3.5% of decline on Friday, and we have started this week on a jittery note as well. The much talked about, the much awaited OPEC Vienna meeting is in this week itself, and there are expectations that you could see Saudi Arabia and Russia actually go ahead and increase supplies. That, of course, doesn't work well for the prices. Remember, we have seen 3.5-year highs for the crude oil prices, but from those kind of levels, we are nearly 10 to 12% on the weaker side there. There are other factors to watch out for as well. You have Venezuela problems which are spiraling out of control. You have China talking about tariffs on US energy products, and you also are looking at the fact that the markets do seem to think that going forward from here, much of the demand really would expect it from China and India. So these two economies, on whatever is happening here, the election year, etc., would all be on the focus as well. In the meanwhile, we are looking at pressure onto the crude oil prices, and this week is how we have started the day with.
Okay, that's on crude. Manisha, welcome back. We missed you last week, but since you have many days to fill us in on, tell us what happened in the metal space.
Well, that has been under pressure too. If you look at the Chinese data, whether it has been the industrial production, the investment numbers, the retail sales, all of that has been below expectations. So that, of course, is weighing on to the markets. Apart from that, there also is the strength in US dollar. After ECB putting out a cautioning statement, you have seen the euro decline, and the US dollar has taken strength from that. Apart from that, you also have seen a lot of increase in warehouse inventories for many of those metals. And of course, with all of that trade tariff talks going on in the international markets, it does hamper the metal demand, especially from China, and that has been pulling the prices down as well. In the previous week, you have seen most of these metal close nearly 2 to 4% on the weaker side, and that's exactly how we have started this week as well. You have the copper prices trading at a 2-week lows. You have aluminum and zinc trading at 2-month lows as well. So nothing in metal space that is trading in the positive in the Asian markets right now.
Okay, well, metal stocks have been under pressure. We'll watch out for them, Manisha. Thanks very much. Several other stocks in the news as well. So let's go across to Sonal for a wrap-up. Sonal.
Good morning, Surbhi. I'll start with Idea. Well, reports are suggesting that the Department of Telecommunications is likely to approve the merger of Vodafone India and Idea Cellular today. So I'll watch out for that stock, expected to do well in trade today. Other stock that I'm focusing on is ONGC, because the company has sold natural gas from 3 coal bed methane for a price ranging from $5.77 per MMBTU to $6.12 per MMBTU. And this price is higher than what the center is offering. Expect that stock to do well in trade today as well. But remember, these are only reports and CNBC TV18 has not independently verified them.
Okay, thanks a lot for that. Well, here's a quick recap then of our top stocks to watch. Expected to gain today are names like Tech Mahindra, Natco Pharma, HPCL, BPCL, IOC, Idea Cellular and ONGC. While stocks that are expected to be under pressure this morning are Dr. Reddy's, Hindalco and Nalco.
Okay, now beyond that list, we have one more stock that's going to be in focus today. It's actually making its debut on the street. It's the demerged renewables business from the Adani Group. Adani Green Energy is here, and we have Anisha joining in to tell us more.
Hi, Surbhi. Good morning. Well, yes, as you mentioned, Adani Green is the demerged entity of Adani Enterprises. Now, remember when in April, the company went ex the renewable business, the stock corrected by around 20 to 30 rupees, and that's the expectation for today, that Adani Green would list at a value of around 20 to 30 rupees per share, more in the 25 to 30 range. Now, remember, this is a good business for the company. The PLFs are higher, 24%. They have a capacity of around 3 gigawatts, partly under construction as well as their tariffs are good at around 5 rupee per unit. Also, we have seen a lot of interest in terms of the deals that have happened in the renewable space of late. So this might garner enough investor interest. Remember, the demerger happened back in October when they had announced the share ratio as well, 761 versus 1,000 if you have of Adani Enterprises. And also remember that this year, FY19 is expected to be much better for Adani Green because they had added a lot of capacity in FY18 itself. So that should start trickling into the revenues this year. So overall, looks like it's going to be a good interest is what we will see, and the listing is expected anywhere between 25 to 30 rupees. Back to you.
Okay, we'll keep an eye out on that. Thanks, Anisha, for that. Let's take a quick break on that note. But our technical experts, Sudarshan Sukhani, Mitesh Thakkar and Prakash Gaba will join in on